Hello, and thank you for tuning into the Art of SBA Lending. Today, I am speaking with someone who is in one of the more challenging roles in our industry, managing an SBA program at a small community bank, 150 million in assets. Ladies and gentlemen, we have Maria Lawson on the podcast. She's the managing director of government guaranteed lending at Signature Bank of Georgia. She's also a freshman board member of GLQC, the all-volunteer board behind the Southeastern Small Business Lenders Conference, which is where we recorded this interview. We talk about some of the hot topics that were discussed at this SBA lending conference, the new SBA regulations. Of course, we're at the top of that list, and we got Maria's reaction to all of that. We also talk about what it's like running an SBA division while producing at a small bank where, let's face it, everyone's wearing multiple hats. Plus, Maria is announcing the location of next year's Southeastern Small Business Lenders Conference. So stick around. I hope you enjoy. If you're an SBA BDO, you're probably getting multiple calls every week from recruiters telling you about an amazing opportunity at an incredible shop with an open credit box and a strong comp plan. You got to at least hear them out, right? The truth is, most good BDOs can't move because they'd be leaving too much on the table for it to make sense. But alas, all good things must come to an end. When that time comes, how do you decide that critical next step? You need to talk to an industry insider who knows the market inside and out, an advisor that can cut through all the BS and tell you what it's really like to be a BDO at this bank or at that bank. Baker Lewis has 30 years experience, not just in recruiting, but in every aspect of SBA lending. They know the business and they are committed to helping people make the right move, even if that means they don't get a placement fee. If the time has come for you to consider a move, I'd encourage you to partner with an advocate like Baker Lewis, who will help you evaluate the market the way they would if they were making the move. An agent who can help you get the deal you didn't think was possible. Let me tell you folks, anything is possible. Call Baker Lewis.
You know, there's a bank called Sandy Springs Bank, but it's in Maryland.
Oh, is it? Not familiar with that one. I am
not.
familiar with Signature Bank of New York, though, because I've had to explain that a lot.
Yeah. That's why I like these shops that are popping up where they just create a new name. Mm-hmm. Because it's like, there's multiple like Fidelities. Mm-hmm. Like the Fidelity Bank. Fidelity Bank of this.
But being affiliated with a bank still, have bank funding.
Well, yeah, I mean, it's still the bank. They just put a DBA on it.
Like Acclivity.
Exactly. Mm-hmm. 44 Business Capital, Voyager Lending, Venture Us. Those are all banks, right, but they just create the branding.
Yeah.
Signature Bank is a good name. I like it better than like First Banka, whatever. Yeah. Third Banka, Mississippi, like whatever.
Very generic.
Yeah. Or Citizens Bank. That's like the most, what even is that? We're good? Okay. Well, thank you, by the way, for doing this and agreeing to it.
I'm excited.
Semi-reluctantly, I think.
I'm excited to be here on the couch.
So we are in Asheville at Omni Grove Park Inn. I don't think I said that right at all.
No, you've got it right.
Really? Yeah. Which is lovely property. I think I've been here probably 4 times. So the conference has been here, like 4 times?
Yes, we switched it up a little bit last year and went to Amelia Island.
Yes.
But we're back in Asheville for this year.
Yeah, so. First of all, thank you for all the work you do, because I know what that's like being a part of Flagel, and especially with COVID, the craziness of all that.
Right?
I mean, we had to sign contracts to like 2030 to like get out of some of this crap that we found ourselves in.
It's planned so far ahead in advance.
Yeah, you do. Yeah. So what's your involvement on the board, and what's it been?
Well, I just joined, so this is my first year.
Okay.
And we all, like you give so much back to just SBA and the SBA community, and I feel like it's my turn. So we just collaborate, a bunch of volunteers to just among our peers, just to gain knowledge and just that much.
Exactly. I had the same mentality. Like I'm like super blessed. Like how'd I fall into this life? Yeah. Like I'll do anything to give back. So I did 6 years. Do you guys have term limits on yours? Do you do like 4 years or something?
I think 3.
3 years. Okay.
But yeah.
Yeah. And who's the chairman this year?
It's Kim Eels. And so I'm not sure if she's staying on or if there will be a change this year. Like I'm new, I'm still a baby. So I'm still learning.
It took me a while to figure out what the heck was going on. What was your like involvement within the board? Did you work on any sort of committee?
Yes. So I was in the sponsorship committee.
Oh, that's
so
important.
We think, so bringing in the money, and we had a good group, and it's such a great conference. It's just the right size, right? So our vendors get, one-on-one with the lenders. So we typically don't have a really hard time. We're sold out. We typically don't have a hard time getting our sponsors in, but so we're so appreciative, of course.
Yeah,
we
you
can't
have great
do it without
sponsors.
them.
We
do.
We shared a lot from Inflagle, similar crew, and they're absolutely great. Were you involved in any of the discussions around the agenda for the conference? Because I was just curious. Like, I know it's about to start, but this will have already come out. But I'm curious, like, what are the hot topics right now that people want covered?
Obviously, all the changes. There's a separate committee, of course, for the content, but we all have some kind of input, because we live it every day, right? So there's certain things that come up. All the SBA SOP changes, of course. So we want to make sure to cover that. We also have a session this year that's kind of different. That's just like just like this, sitting on the couch with a bunch of peers, of the business. I have an attorney, environmental, and all that. And we're just going to open it up to all the lenders and anybody that attends that session, just for them to be able to ask those questions, because it's important to, sometimes we come with a list and we just don't have the opportunity to kind of have access to those people directly, because we get, busy and we get in our sessions, whatever that may be. So we're having a session specifically on that. Say,
nice.
If you have a question, just go ahead and get it out there. And it's a small environment, the classroom sizes or the session sizes are small enough where you just throw it out there. So
yeah, and you kind of have to switch it up every few years. 'Cause,
absolutely.
This has been going on for years and years, and people come. I mean, I've been coming 10 years, believe it or not.
I know, right?
I think I may have missed one, but I went to like the first one in like 2012.
Wow.
It was in Reynolds Plantation.
Yep. Yeah. Which we love that, facility. Of course, that was when it was still called, the conference was GLQC.
Right.
And now it's more
Southern.
Southern.
People are still calling it that.
I know. Yeah, of course. Because that's the
so
origins. Yeah. So, yeah.
That's awesome.
Yeah.
So can we announce where the conference is going to be next year?
Yeah, absolutely. So we're going to switch it up. We might be back in Asheville after next year, but next year we're going to have it at Harris Cherokee Casino. So it's in resort. So it's going to be a little bit of, a different scene for everybody. I think this is the first time we've ever had it there.
Where is that?
It's just about an hour away from here. So in Cherokee. Yeah. So it's yeah. So we'll see. Hopefully we can still get everybody to come to the sessions and not. Yeah,
that's like doing it in Vegas.
Yeah,
it's like,
exactly. Yeah. But that's just makes us work harder to get that content in that, will keep us, keep everybody coming.
Be grade A content.
Yeah. So we hope that, our sponsors continue to follow us and we get great attendance.
I think you'll be okay. Cool.
I hope so.
So, all right. So let's get into the meat here, the meat and potatoes.
Okay.
So let's start with currently where you're at and what your role is. I want to learn kind of what you're doing right now.
Yeah. So I'm at Signature Bank of Georgia. I have to always clarify that, of Georgia. And I I'm the director of the Government Guaranteed Lending Department. And love it. Been here for 2 years. I've worked at small banks and big banks. And I was, prior to this, I was at Celtic Bank. Great place to work as well. But I'm just a community bank girl at heart.
Were you a BDO at Celtic?
I was.
Oh, so okay. Well, this is interesting.
Yeah.
So first, let me start with with the bank and the division here that you're managing. Did you start it, or did they already have something going?
They already had something going, but I came on board to kind of just, beef it up, and it's been great. It's been good. So we did great last year. We are a small bank. Signature Bank is a small bank in Georgia. we're only about 150 million in assets. So, but we were top 7 in Georgia on the SBA list last year. So I'm happy about that.
That's awesome. Where are you lending? Just in Georgia or?
In the contiguous states as well.
Okay.
Yeah. So.
Even South Florida?
Even South Florida.
We get a bad rap. How can you tell me about like how the division is structured?
Yeah. So, our SBA department has a little, we're kind of, I don't want to say on our own, but we do have, our closer, and we do have an assistant, and then we have the BDOs, and I'm obviously an active lending
producing
manager. And then we report our credit team is, because as you know, it takes a village, but we share the credit team with conventional, of course, as well.
They do both.
Yeah, we do both. Yeah. So, but we have a great underwriter, Denise, that we brought over, and she's very versed in SBA.
Ah, okay.
Yeah. But we have several underwriters, and they're all great. I've been happy, and that's the thing about being able to create or bring up an SBA team is that you kind of get to hire. It's so important to hire the right people and have the right people on your team. You're only as good as your team, obviously, so it's important.
So you've got like a kind of a slow and steady approach.
Mm-hmm.
You're not looking to hire 20 people next Tuesday.
No, not
up.
At all. We're very selective, and we've just been blessed to be able to just hire at the right time and get good people in all positions.
I mean, that's important, obviously. So this is interesting because I've worked at ReadyCap and Fundex, and they were more like national. Fundex wasn't huge. We were doing like 130 a year. ReadyCap got really big.
Yes.
But I haven't been in a smaller shop. You didn't say you had a director of operations.
We do, but we share it, with the entire bank. We have a director of operations.
I'm talking about just SBA, because SBA is its own thing.
No, I know. That's why.
Closing manager, servicing, like all SBA dedicated. Your setup is more, it's shared, which is I've seen this before. In fact, our guest this week, as we're recording it, they became the #1 lender in Maine without a dedicated SBA. They kind of share it and they cross-train different people. Is that kind of what you're looking to do, or?
That's what we've done.
Yeah.
That's what we've done in loan operations. And we have construction lending as well, within the SBA. That adds a whole different layer,
Yes, it does.
So, yeah. So, we're just a lean, mean machine, because we all get in and get it done, but we all do a little bit of everything. Yeah. And it's important. I think the most important thing is that you have support from your upper management, right? And that they understand SBA. Because I've been in places where they do conventional, they do SBA, and we share, but they don't really understand SBA and what all it takes to get an SBA loan across the finish line. Because obviously, there's more layers, there's more, compliance, and you've got to have the buy-in from, and, even from credit all the way up to the top.
And it's hard to explain exactly what goes into it.
Right.
Here, follow me around for the next 3 months and I'll show you.
I know, exactly. Right. Yeah.
Oh boy.
Blood, sweat, and tears.
So what was the bank's experience with SBA before you got there? Was it, just what was their experience with it?
They've always been open, and they struggled through the recession, and really SBA really got them out of a tough bind, right? They were doing good SBA loans, smart loans, and they were able to leverage secondary market sales, to keep going. And now, we're super healthy. So they have a respect for SBA and what it does and what it can do, not only for a bank, but obviously business owners, and now since we're a small bank, we're involved in our community. And that's important, to carry out the simple SBA mission, of the entrepreneurship and all that. But prior to that, They did, but they weren't heavily, doing SBA loans. And now we've really put an emphasis in growing and just getting it done.
Good.
I think there's about to be a big problem for a lot of banks. We're all spread so thin, only once we know of a problem in the portfolio do we put resources on it. We are reactive, not proactive. But I have good news. Our friends at Lumos have a way to score the loans in your portfolio so you can see which loans have a higher chance of having problems, so you can get out in front and help prevent defaults before they occur. Their analysis will provide an overview of your predicted portfolio performance, allowing you to analyze the data on all sorts of levels. You can look at the portfolio as a whole, or by subcategories like industry or geography, or you can go loan by loan and look at the predicted expected loss and probability of default. And you can track these numbers over time so you can start to see trends in your portfolio. Now you have no excuse. You can finally take care of your portfolio the way you should be without having to hire a team of analysts, because Lumos did that for you. Go to lumosdata.com for more information.
And so I know your background if you were a B2 at Celtic, I know you have a little bit more of a sales background, which is probably why they put you in charge of sponsorship in the community.
Yeah.
But just take me back to the beginning now. Like, how did you get into SBA and where did you spend most of your career?
So, so long ago. I've been in, just banking for over 25 years now. And I started in mortgages. Then I went from a mortgage company, I went to work at a community trust bank, which was a community bank out in Dallas, Georgia. And I learned tremendously there. I did mortgages, and then I moved to construction loans, and then commercial loans, and just moved. And actually, I've been a lender that hasn't moved. In the SBA world, you see lenders move quite often, and I've kind of stayed with the bank for longer than the typical lender stays. SBA lender stays at a bank. So I was with Community Trust Bank for 7 or 8 years.
It's a while in our
yeah. And then I actually went into management. I managed. From there, I actually went and started up a bank with a group that came from Community Trust Bank. They got bought out by SunTrust. So I went to another startup community bank, and I organized and started a mortgage division, started making money, and then we integrated into the bank once the bank was established and had their charter.
That's interesting. That's a cool opportunity, because then do you have a more autonomy in a situation like that?
Right, yeah. So we were, I got a broker's license and just did mortgages until they were approved for their charter, and then we just went right on in and became part of the bank. And then, in the recession, they needed me on the commercial side to get some commercial loans and bring up the commercial. So I did that, and then I got an opportunity to go to a credit union.
For doing SBA?
Yes, to start their SBA department.
Really? So you've started an SBA department before?
Mm-hmm. Yeah,
How do you do that?
Wow.
Where do you start?
Well, because it was with LGE, it was Lockheed Martin Credit Union.
Really?
Yeah, out of, in Georgia, of course. And they had, we had the assistance of an LSP out in Salt Lake City.
So that take a lot of it off for you,
yes.
Underwriting, closing, and servicing?
Yes, that's how we started, because it was just me. So,
wow.
And then, and that's where you have to have the buy-in of, I don't think, after 2 years, I left LGE and went to Touchmark National Bank. Everybody
now I remember that. Now I'm catching up with you, I think, there.
Yeah.
I remember this.
And then after managing, at different stages in life, but at LG, I had 2 little ones at that time. And so I just said, I don't want to manage anymore. I'm going to just do the BDO, which, but because I love it. I love the interaction with my borrowers and just, it's
the best.
Yeah, it's the best. It's making it, it's just seeing it at the beginning and seeing their dream through. And I still get thrills out of that, and just learning about so many different industries and ways, to make a living. It's always fascinated me. So I went back to doing that. at Touchmark and stayed there for about 7 years, which that's a long time at Touchmark.
That is, I mean, yeah, that's incredible. Like that's an achievement. 7 years is an achievement in and of itself.
Yeah.
Which is signals, I mean, on a stack of resumes, you're standing out. Like, 'cause everyone else is 2 to 3 years.
Right.
It's crazy.
Right.
Why do you think you've been able to have these long runs at banks?
I think pivoting, right? So, I mean, SBA just serves so many businesses, right? It's just being able to pivot and learn about different industries and just being in touch of what the bank needs at that time.
Meaning the bank might change. And
Yes.
when that happens, a lot of people just jump ship.
Exactly.
But you decided to pivot with the bank.
Right. And
Interesting.
that's difficult and it takes a lot of time and you have to be flexible. But, so it's given me an opportunity to be, to do hospitality, hotel lending and poultry lending. So, the difference between hospitality and, poultry or
lending.
car wash. Yeah. Georgia is huge in poultry. So I did that for a while.
What are the use of proceeds for poultry farming? For poultry, what are they doing? Refinancing debt or?
No, they're purchasing,
Equipment and stuff?
yeah, they're growers, they grow chickens, and there's several layers. We could have a whole session on that, Drew.
I've yet to do that.
Yeah.
I've yet to do that one.
Yep.
Interesting. So when you were leaving Celtic, did you consider staying a BDO? Obviously, you got into managing again, which, you left before because life got crazy and whatnot, which I totally understand having a 1-year-old. But
yep.
Was that a hard decision, like between the two, or did you know you wanted to go into management?
Celtic is a great bank as well. Their credit is great, but they're big, right? I mean, they're like top 3 or maybe 5 in the nation as far as SBA lending goes. There's great people there, unbelievable lenders there. But it's just big, right? So it takes more to get that wheel turning. And I like to be able to, when I say something, to be able to deliver on that. And that, in a small community bank, you're able to do more of that because the people that are making decisions, those decisions with you or are part of that are right there. They're close. It's not like
we got to ask corporate over on the other side of the country and they're dealing with 20 BDOs.
And I have to say Celtic's very good at that as well, but I'm just like, and I actually just got a great opportunity to come to Signature Bank. I like the team, Freddie Dutch and Steve Reagan. They're the ones that really brought me on and love working there, and it's been great.
I totally get what you're saying. I mean, there's a lot of people that prefer the smaller shop.
Yeah.
There's certainly pros and cons. Maybe one day we'll do a debate on the whole thing.
Right.
But I totally understand that. So like, but you're more than even a player coach. You're running the program and producing. How do you balance that?
Again, I go back to just getting the right people in, right? Hiring the right people, just making a strong team. Our team doesn't need a whole lot of management, right? They know the program, they know what they're doing. It's more like I don't run it. We all work together. So,
Gotcha.
it's a different kind of management style, I guess, and it's small enough where you can do that, right? You can't do that in a bigger bank.
Yeah, it's a team effort, which I mean, I haven't been in that environment, so that's why this is educational for me. I've literally only worked at places where there was a head of GGL and that was their whole job. And then there's, an operations person,
Right.
a closing, a credit manager or chief credit officer, that's just SBA, a sales manager. There's like layers and
Right.
layers.
Yeah.
So like in a role like yours, what would you say, aside from the production, like on just making sure the program stays compliant, profitable, et cetera,
Right.
like what are the main responsibilities you have aside from your production responsibilities?
So, that's right. Preserving the SBA guarantee, of course. That's our biggest thing, that we're closing, the files correctly, that our credit standards are still strong, service our customers, that's That's pretty much it. I mean, that's what I focus on.
You make it look so easy.
I know. Yeah. Yeah. Well, it's not, as you know, there's a lot that goes into that and a lot of balance. But, again, it's just having the right team and everybody working together.
Do you do a lot of business acquisitions over at the bank?
They did a lot prior to me getting there. I'm a lot more focused probably on the real estate side, but we have done business acquisitions and we're open to it. We understand that that's happening a lot more now.
Yeah.
And so we look at a lot more. So I don't say no, and we look at them and consider them as well. All my contacts have primarily, and the lenders are primarily based on real estate acquisitions. But yes, of course, and we're seeing a lot more of them.
Like special use real estate or like offices and warehouse type of thing?
Both. We do a lot of, car wash, special use, hotel, so we do it all. We're not really specialized or kind of limited to one specifically.
Yeah, because a lot of my friends who are more real estate they were down last year because of the rates.
Right. I know.
Have you seen that?
We haven't had, last year was a great year where we're up from the year before. This year, the rates have been a struggle, but we've been blessed so far. This year, at the beginning of the year, I've seen a little bit of a slowdown, but we're really have gotten really busy lately. And I think just everybody's in anticipation that hopefully the rates will come down.
Yeah.
Yeah.
Well, that's the hope.
You're right. I know. It hasn't happened. Right. It hasn't happened as fast
as we're recording this. So far, rates are prime's 8.5 still, guys.
Yeah, I know. Yeah. And it's getting tough, and we have a lot of competition, as we know as well. The premiums have been getting lower on the secondary market as well. So it's been tough.
Well, they've been inching back up.
Yeah. Just recently.
Yeah. Like the last 7 weeks or something, I feel like it's like going 0.1%. Like every week it's like, but do you find, are we compared to let's say 10 years ago, how much more competitive is it today, you think?
I think it's a lot more competitive. You have just a lot more banks, I think, doing SBA loans now. Where before you didn't have that much competition. I think, you're seeing kind of the same thing with USDA as well, right? So USDA, there were, just a few banks that used to do USDA.
It was like a secret program.
Yeah, and everybody was so specialized, right? And then now you see it growing, and they've made it a little bit easier. So
it's another way to make money. So people figure it out.
Yeah, and I love the USDA program as well.
Yeah. So with the competition, I don't think it's not just more banks. It's like borrowers and referral sources can access more banks.
Yes.
You can literally get a list of every SBA lender in town and call them all up if you want it.
Yeah. So, borrowers are more educated now. So, I always say sometimes you don't want to get a borrower the first time. You want to let them experience the SBA, world, and then come back to you because they're somewhat versed. But I love both, right? So I love going through the process of explaining SBA and why it's good and the differences. But, obviously the other is good as well. But yes, your borrowers are well versed, and there's a lot of competition and, rate competition and program competition. And now with the changes of, the SOP rules. So some banks have changed already and some haven't. So it's just like finding, the middle ground where the bank feels comfortable, such as, equity injection.
Right.
And
you don't need it on startups anymore.
Right. So it's kind of like, where's, so you have to be comfortable it has to be good for both sides. Right.
Yeah. And that's scary. Like with the, I don't understand why they would just remove equity injection requirements for startups. Like it was in there, it was 10%, which was still aggressive.
Yeah.
In my opinion.
Yeah.
But then they just remove it and then it's just do what you do. And it's like, what's even the point of that? All you had to do was leave it in place. And then we don't now have to guess.
Right.
But now it's like, oh, can we do 5? It's only a matter of time before a bank will do a no injection. And it will probably be for like a doctor or something.
Yeah.
A low risk startup industry. But when you move the goalposts or remove them, slowly, I feel like competition just drives certain lenders towards
right. So
that
yeah,
end of the line.
you get the loan or you don't get the loan. Just like now we're running into 500,000 and under. Not any collateral at all.
Right.
And you have to weigh what's a good credit decision as well.
Yeah, and there's going to be lenders that will do those with no collateral.
Yeah.
And will just do what the SBA is saying, the bare minimum, and people will find them. And it's going to be interesting because then, it becomes more relationship based, but a relationship I think only goes so far.
Right. Yeah. They only love you so much.
But it's like, okay, where do these banks that are in the middle, what's going to happen to them if everyone starts moving into this area that they think is just more risky, and then over here on the lower risk ones, the pricing's just going crazy low,
right?
And then over here in the middle, these banks are paying 2 points or whatever, which I don't know what you're doing on points, but that's a whole nother discussion.
Yeah, it is. Yeah, it's difficult. Just to find that happy medium is difficult because obviously, the bank can only, in a smaller bank can only take so much risk as well. So we take probably less, I don't want to say less risk, but it's definitely, we're careful. We have common sense, and we don't have silos where you have to fit into a specific box and you have to check the box, right? It's like we sit, our loan committee, we sit around a table and we discuss the loan and, we say yes or no. So if it makes sense and, we can mitigate because there's always risk. So we're able to mitigate along with the SBA guarantee,
So that's how you do it. You sit at the table and talk about a loan and you make a decision.
Absolutely.
Old school. I like it.
Old school. Yeah, which I love.
And you do that on pretty much all your loans?
Mm-hmm. Yeah, we have certain delegated, in different committees, but yeah, we do.
Have you done committee, is it like committee presentations? Have you done this before?
Oh, yeah. Yeah. So we do it here, of course, and up to a certain level. We, we've got officers loan committee. And after that, we got a directors loan committee where, some of our board members sit in and approve or deny the loan.
Have you figured out, is there an art to doing the presentation or presenting it in a way that kind of gets the point across, but you kind of present it in the right light and, whatever? Do you have a strategy around that?
I do, and I don't know that I want to talk about it.
No, it's a secret?
No, but yeah, there is an art to it, It's, try not to get too far into the weeds, and disclose everything early on and make sure you hit on all the positives, and the strengths.
Well, I interviewed Jim Mueller. I don't know if you know him.
Yeah, he's the legend.
I love Jim. Yeah. We actually talked about the committee with him, and he says he always ends with the positive stuff. Yes. And actually, Celtic taught me a lot about that as well, and although they're so big, they have committee just like you sit around and also present your loan. And they approve it or deny it right there. So they're really good. That part of Celtic it's amazing as well. Yeah, Jim has done some amazing things over there. Yeah.
Mm-hmm.
So when you're driving business into the bank, are you doing that through referral sources or bank channels or just borrowers coming to you direct?
All of the above. You have to have it all now. As we just talked about being competitive, so we have business. I've been doing it for so long. I have repeat customers that are continuing to grow, of course, and need more additional funds. And then we have brokers that we use, of course, as well. We love our broker business, real estate agents. So, and of course, our conventional lenders bring us referrals and, other bankers as well, so because my credit needs are different from, or our credit needs at our bank are different from possibly yours, so there's nothing better than another banker saying, hey, I think you could do this. We can't do it because of this, but maybe you can.
What are those conversations like when you're talking to a conventional lender at the bank and they're like, I think I might have an SBA thing, or you're telling them, hey, this is what we're doing here on the SBA side? What are those conversations like?
They're typically, conventional lenders are typically familiar with the SBA loan. They're always surprised because we've got The equity injection, is so different. So they're always like, oh, okay, wow, projection based, of course, they don't do any projection based, so but it's good, they're excited that they just want to help the borrower just like we do, right? And it's good for them because our SBA customers also become conventional customers. We are looking now at customers that I had 5 years ago that are with the high rates, they're going to the conventional side now. And that's a great thing to see as well.
When you're talking to these conventional guys, do they ever say they know enough to be dangerous?
Yes,
that's what I always hear.
And they do. That's exactly right. Yeah. You can ask them. They're like, oh, so it's, but we usually, go on a call together and that works well.
Out in the world?
Both. Yeah. I love meeting, sitting down with the borrower face to face. I think that's still important. I think that
does that help with selling and competition?
Absolutely. Yeah, absolutely. Really? Yeah. You'd be amazed, how many people just have gotten away from doing that.
Yeah.
And
I'm one for sure.
Yeah.
I've got my day is basically Zoom calls all day.
Yeah.
And I could do 8 of them. I can't drive around and meet 8 people, but I might be converting a lesser percentage.
Yeah. I think just going, to their place of work where they're making it happen is so important, and obviously they're proud. They want to know, and you can get so much from that visit. So I still think that's important. I still go to my closings.
Really?
Yeah, I do. And I love it.
Well, that's amazing. We just had Victor Diaz on and he was like, saying how we are not doing in-person closings anymore. People are sending DocuSign packages.
Yeah.
And I haven't been to a closing in years.
Yeah.
It's crazy.
Yeah, and I've done both, but here I just, if I can, I'll go and sit down and, shake hands and just happy we're there. That's kind of, it takes a lot of work to get to that closing table.
Let me back up a sec. Did you, when you were a little girl, did you want to be a banker?
No, I kind of fell into it. I was born in Spain.
Really?
Yeah. So I'm half Spanish and half Chinese. So my dad, went to Spain to study medicine and learn Spanish and met a Spanish girl and, got married and had 3 girls. And so I was born in Spain and then they later got divorced and my mom remarried to an American guy. And we ended up here in the U.S. when I was 9 years old.
Oh, are you the youngest?
I am the youngest of 3. And then I had a sister from, my mom's second marriage. Yeah.
Very cool.
4 girls.
And you lived in Spain for the first 9 years of your life.
Yes, and then we came to the U.S. and I actually went back and spent time back in Spain.
Oh.
Yeah, with my dad, and he stayed in Spain even though he was from China. Yeah, he was in import-export business.
Oh,
and he lived in the Canary Islands.
Oh, very cool.
So I went and lived in the Canary Islands, and later I went to study in Madrid. So. Came back when I was in my 20s.
This might be a good time to tell my Ibiza story.
Oh, you've been to Ibiza. Uh-oh. I don't know. Can you tell it?
I don't care. It's my podcast.
That's
I can do whatever I want.
You can do anything you want.
So, with everything that's been going on in, 2023 being the year of sweeping changes, now we're in 2024, but these changes that were ever changing, but it was big, and you have the do what you do stuff coming in. Do you think that makes it harder or easier to run a program?
It makes it harder, right? I think it puts more responsibility on the banks, and again, the competition, it's all over the place. So now, you have to create different guardrails and you have to compete not only, with different guardrails. You have to make sure that your policy is sound, but yet competitive. So I think it's more difficult.
And which is, sure. I don't think that's what they set out to do.
No, I think they wanted to make it easier, and have more lenders come into the program, which I don't think is a bad thing, and do smaller loans. But it's kind of, I'm so passionate about SBA and the SBA program. And, it's been self-funded and strong program. And us that have been in it for a long time want to keep it that way, of course,
Well, what do you think with these changes, competition, and all these factors we've been discussing? What do you think that means for the future of the industry?
It's hard to say. I think that once the dust settles, that we'll continue to see changes. So hopefully this will be a learning experience, and we won't veer too far, and then we'll just continue to get clarity as this has gone out into the market, and then we'll see the results here shortly from it, right?
Yeah, maybe the whole new SBA approval process will just blow over, and we'll go back to having real PLP.
Yeah, and we can keep the good parts, right, of
Exactly.
the changes, and just dismiss yeah.
What would, if you could wave your magic wand and get rid of 2 of the changes, what do you think they would be? I know mine.
Say it. You say it. You go first.
Okay. Well, I would go. I think we said it. Do what you do. And it's the 2 biggest things. Do what you do, and the approval process.
Yeah.
The approval process was put in there because of PPP fraud, right?
Mm-hmm.
But 7A is not PPP.
Right.
So that was a misguided move that came from someone that didn't know what they were doing.
Mm-hmm.
And if I'm wrong, someone please tell me.
Right.
And
hopefully you'll get a chance to ask this, in this session.
Oh yeah, no, I'll probably get banned. And then with do what you do, it's just most people are just doing what they've always been doing anyway. So
right.
Then I get if you want to start with that, but it's going to take a while if that's the case. Because if you're an SBA lender today and you've been doing it for the last 10, 20 years, you're just going to keep doing what you've been doing.
Exactly. Yeah.
But if you're brand new and you just read the SOP and take it at face value,
exactly,
and also don't know what CFR is, and you're just thinking I'm being a good bank and I'm giving my clients an SBA loan, I would be concerned.
Yeah.
Because, at the end of the day, there's some subjectivity to it.
Yeah, there is, and that's what makes us, I think, lenders valuable. So we'll see what happens, and go forth.
We shall see.
Go forth and do well.
Everyone keeps, trudging along, so.
Yeah, so it hasn't stopped. SBA hasn't stopped. SBA lending hasn't stopped. Thank goodness.
Well, and last year was the second biggest year in the 7A history.
Yep.
So it's going to be hard to convince the SBA that these changes were not good.
Yeah, exactly.
When the results were what they want, essentially.
Yeah. What do they say? It always takes 2 years, right?
Yeah.
To see what you've got.
True.
Yeah.
And that's the same with that's what they said with the interest rates, basically.
Yeah.
So this is the year we're going to find out how bad interest rates are going to, hurt portfolios.
I know. It's been, it's been tough. We thank goodness we haven't had issues, but it's been some of our clients, it's been tough. The rate increase, it's been very tough.
It would be shocking that if you underwrite deals in 2021 with even a 300 basis point stress test, and then the rates shoot up in the next 18 months, 525 basis points, there was just it's now a game of luck. Did the borrower adjust?
Yes.
You're probably under 1-to-1 DSCR, if not. I can't think of a more perfect storm than what happened there.
I know. I think we're really, I'm still to the point, might be old fashioned, but I live through my clients, right? My customers, and I feel it with them. I feel the pain with them. So hopefully, the rates will start to settle, and then all the loans that we're making now will be amazing loans, right? Because if they can make it at the rates now, then, they'll be stronger in the future.
If you can do solid SBA deals right now.
Yeah.
And that definitely, I feel good about that.
Absolutely.
It's just we got to deal with the aftermath of that other stuff, which default rate's not that high right now for the industry. I think it's still under 2%.
Yeah. It's amazing, right?
So yeah,
Yeah.
not bad.
Yeah. We'll see.
Go
We'll
us.
see how it maintains. Yeah. Yeah. We've been doing good work, right?
Let's let's actually not sell. We might want to cut that out just in case like
something happens
this year and it goes to 10% or something.
Let's tape a different version.
Exactly. Let's take us doing like, oh man, no.
Right.
Well, Maria, thank you so much for coming on
thank
the
you.
podcast. This was awesome.
Yeah.
Love talking shop with you.
It's been great. Thanks so much. And thanks for all you do for SBA.
My pleasure.
I'm excited to be here.
It's fun.
All right, that's it for this week. Don't forget to subscribe to the podcast so you never miss an episode of the Art of SBA Lending. And if you have any feedback or suggestions, email me at ray@artofsba.com. Until next time, ta-ta.